Hey, you have Patrick Findara here, co-founder at Vetted Biz. We've been getting a lot of inquiries from our viewers on the Jack in the Box franchise, especially for our viewers from California. As our California and West Coast listeners and YouTube subscribers probably know, Jack in the Box has been around for nearly 70 years. It was founded in 1951 in San Diego, California. And as of 2022, they have over 2,200 locations across the United States. Now, most of them are in the Western states, and it doesn't have as much brand recognition in the East Coast compared to some brands like McDonald's, Burger King, or Wendy's. But those avid customers of Jack in the Box would argue that McDonald's, the Wendy's quality burger, does not compare to the level that Jack in the Box has. And talking about the value of a company, this is a big company. You know, it's not the same size as McDonald's that's been publicly traded on the New York Stock Exchange for many years. But this is a $4 billion company, Jack in the Box. And again, representing over 2,200 locations. The royalty fees are pretty standard for a food and beverage franchise at 5%. And marketing fees a little high though at 5% of gross sales. Usually we see the marketing fee at 2 or 3% for a restaurant brand. And one thing, the investment is high. It's 2.1 million. So unless you're making money from the real estate development and then selling that real estate potentially to like a REIT or real estate investment trust, operating a Jack in the Box, especially if you're starting with a ground up building, probably not going to make so much money. So depending on the operating margin, 10, 11, 12, 13% profit margin, it's going to take anywhere from 12 to 15 plus years to recoup your initial capital investment if you use the midpoint investment at 2.1 million. So I imagine most of the Jack in the Box franchisees are recouping their capital faster, either through using leverage and getting a SBA 7A loan or some other sort of financing for opening up their business. So the cash on cash return is going to be much faster than 10 plus years, and or developing the real estate, selling the real estate for a profit based on their development cost and recouping the capital back faster that way. When it does come time to sell a Jack in the Box franchise, if you're just selling one location, it's going to be hard to get that $2 million investment back. However, if you develop 5, 10 Jack in the Box, the multiple is going to be a lot higher and it's going to trade at a higher EBITDA multiple. Basically off your earnings, if you have 10 locations, you're going to be able to sell that business for much more money than a comparable business that is much smaller. People are willing to pay, principally private equity funds are willing to pay for a business that's doing $1 million, $2 million, $3 million in EBITDA, much more than a smaller business, as it's easier for them to continue to grow that business once they already have the model in place and they have a management team oftentimes that they're taking over. So again, Jack in the Box, net profits are quite low, 150 to 180K. And if you invested $2 million to open up that franchise, probably not going to make so much money. It's going to take a while to get your capital back. They were growing before the pandemic, but in 2020, they had net negative growth of closing down 10 locations. So definitely 2020 and 2021 were tough years for Jack in the Box. And let's stay tuned to 2022 and see how they grow this year. I hope this video was informative. If you liked it, share it with your friends and feel free to write us an email at patrick@vettedbiz.com to see what other businesses that we can go through on your behalf.